What's up traders? In this video, I will be performing a market forecast here on EUR/USD using smart money concepts. So stay tuned. Now, if you've been finding it a bit tricky navigating the financial market and would like some guidance in your trading journey, then I suggest checking out my Patreon memberships. I offer a Discord server in which I share pre-market analysis, trade ideas, and with the premium tier, you also get the opportunity to book a private one-on-one call with me. Link can be found in the description below. The purpose of today's video is to give you guys more of a medium to longer term outlook on what I anticipate price action to do here on EUR/USD. Going into the start of May, going into the remainder of Q2. All right, now it's been roughly a month since we last performed a market forecast here on the pair. And at the time of performing that last video, price action was hovering in and around about this area in here, interacting with this weekly demand zone. Now, obviously, because of the fact that we had recently come off of a mitigation of a well-priced weekly supply zone in here, we were anticipating overall bearish continuation down towards initially this weekly demand zone and then further on this weekly week low level down here at 95,358. However, we told ourselves that in order for that bearish continuation to occur, price action would need to overcome and violate this weekly demand zone. Now, at the time of performing that last market forecast, we knew that if this demand zone were to hold, we could see a slightly deeper pullback into premium pricing, right? Potentially towards this weekly supply zone before price action were to then roll over and turn bearish. Now, as you can see in the weeks after performing that analysis, price action did end up holding at this weekly demand zone, and we did get a very nice bullish reaction off of that zone. However, I want to point your attention to two very critical things here, because while we have seen that bullish reaction, price action has not broken and closed above this particular weekly high in here, and also price action has not broken and closed above this weekly supply zone. So what this means is, despite the fact that we've now seen this bullish reaction, we find ourselves in a scenario now where that bearish continuation could easily step back into the market, purely because of the fact that price action at present is struggling to violate this particular high and is also struggling to break and close above this weekly supply zone. So as we're heading into the month of May now, I'm going to be keeping a very close eye on this particular level here at 103.28. All right, this is a very significant level because essentially this is the first level that price action will need to break through and violate if we are to see that deeper bullish pullback in towards this weekly supply zone. However, if price continues to fail at this level as it has been doing, then we can anticipate that overall bearish continuation down towards this weekly demand zone as an initial target, and then overall all the way down to this weekly low again at 0.9358. All right, now from the weekly, I'd like to drop down to that daily time frame, and as you guys can see, at present our daily time frame is currently pointing bullish. You can see that this is that weekly demand zone that has given us a nice bullish reaction, and that recent bullish reaction is actually contained within our most recent daily range. Now, as you can see, obviously our daily time frame has been bullish in here, creating these higher highs and creating these higher lows. All right, our most recent break of structure on the daily time frame is going to be this bullish break of structure in here, as price action traded up to mitigate that weekly time or that weekly supply zone towards the back end of 2022, the start of 2023. And what that did is it helped generate a new bullish daily range. So you can see that we have our daily strong low down here, and we have our daily week high up here. Now we have already seen a pullback into discounted pricing, and we've already seen the mitigation of a well-priced daily demand zone, which then generated that bullish push to the upside. What we haven't seen though is we haven't quite seen a violation of the daily week high. Now this is significant because if we are to see continued bullishness here on the daily time frame, we would obviously like to see a violation of our most recent daily high, which is represented by this daily week high. All right. However, as you can see on 2 occasions, even though price action has been interacting with the zone, we failed to violate the zone and we failed to see a significant follow through, right? We failed to see a significant break and close and follow through of this particular area. Now, what that means is it means that currently we are still pointing bullish overall here on the daily time frame, purely because of the fact that our daily strong low remains in place. However, because of the fact that we've now seen these 2 failed attempts to violate the daily week high, there is now a possibility of an extended period of bearishness potentially incoming on this pair. We can see that price action has already mitigated a daily demand zone, which was essentially generated after this internal break of structure to the upside. This was the demand zone that gave us that second attempt to violate the week high. That has now failed. And if we investigate this particular price action a little bit further, all of the previous daily demand zones that were created during this particular bullish push to the upside have already been mitigated. So essentially, there is nothing left for price action to come back into and mitigate before generating another potential push to the upside. All right. So what I like to do in a scenario like this is I like to wait for price action to develop a little bit more. However, I use my current anticipation of a bearish reaction off of this level because of the failed attempt to violate that level. I use that as my directional bias to inform my trade ideas and my trading decisions from an intraday point of view or from an intra-week point of view. I want to see whether or not we are going to be getting a slightly prolonged period of bearish price action before price potentially continues to the upside. All right. One thing I will say, if we're just looking at it purely from a price action point of view, we have already seen a pretty prolonged period of bullishness here on the daily time frame, and it does look like price action is starting to print what looks like a potential double top in this particular area. Right now, as you guys know, double tops when trading smart money concepts are a form of liquidity. So if we are indeed seeing a double top forming in here, we can anticipate potentially for price action to give us a little bit of a bearish reaction before going ahead to grab some of that liquidity. All right. And if that were to happen, if I remind you again of what the weekly time frame is doing, that would then tie into the possibility of seeing a slightly deeper pullback towards this particular weekly supply zone. However, the only time that would materialize is if price action were to go ahead and break above this particular weekly level again at 103.28. All right. So very interesting area that price action is in right now on the daily time frame. We're going to be keeping an eye on it going into the remainder of May. Now, to end things off, we're going to be looking at the 4-hour time frame just to give you guys more of an immediate directional bias that you can potentially take into this first week of May. All right, I'm recording this particular video on the 1st of May 2023, and if we look at the 4-hour time frame, we can see that our most recent 4-hour time frame also happens to be a bullish one. Right, we can see that our 4-hour time frame has been putting in these higher highs and these higher lows down here. Our most recent 4-hour break of structure essentially came in here, and that generated this particular 4-hour range, all right, which is a bullish range. Now, we had a nice pullback into discounted pricing. We had price action mitigate a well-priced 4-hour demand zone. Immediately after that mitigation, though, we entered a period of consolidation where price action was essentially building up liquidity on both sides. We eventually broke out of that consolidation phase, pushed to the upside. However, our 4-hour supply zone in here prevented price. It essentially acted as a form of resistance, and it prevented price from going ahead to violate that 4-hour week high. We had a nice bearish reaction to that 4-hour supply zone. we came in to mitigate a 4-hour demand zone that generated as price action pushed out of the consolidation phase. We then had another mitigation, which gave us a second attempt at violating that 4-hour week high. That second attempt also failed to violate the 4-hour week high, and after that failed attempt, we saw price action essentially trade bearish, but it trade bearish in a very corrective and consolidative manner, right? So at present, on the 4-hour time frame, price action is essentially trading within this area of consolidation in here. All right, we do have a bullish 4-hour range, and our anticipation overall is for the 4-hour week high to be violated. All right, now keep in mind, we are also coming off of a failed attempt to violate the daily week high in and around this area, so we can anticipate a slightly prolonged period of bearishness. However, we currently see, because of this period of consolidation, we can currently see that both 4-hour supply as well as 4-hour demand is holding. So in order for us to break out of this consolidation phase, we need to either see supply fail or we need to see demand fail, right? One thing that can give us a little bit of indication of what price action is likely to do next is the fact that we've got this pool of liquidity that sits in here left behind from that previous or that initial consolidation phase in here, right? So what we can anticipate now, because we've seen a failed attempt to violate the 4-hour week high, because of what the daily time frame is doing, because of what the weekly time frame is doing, we could potentially see price action trade a bit lower within this range to potentially come in and mitigate this 4-hour daily demand zone, which is an extreme zone, right? If it were to do that, it would be grabbing this liquidity, it would be filling just a little bit of imbalance that's left over in this range, and then it would create a scenario where we could see another potential bullish push to the upside. All right, obviously, in order for that to occur, price action needs to go ahead and violate 4-hour demand. Now, even though it was a bank holiday today, we did have one high impact news event coming out of the US. That was the ISM manufacturing report. Now, that particular news event is what generated this large bearish candle that you see in front of you, this large bearish engulfing candle. Very significant because it is an early indication that we could be seeing price action trading a little bit lower. However, we can see that price action is currently holding at this 4-hour demand zone, right? So for an immediate directional bias on the 4-hour time frame here going into the first week of May, we could definitely see a slightly deeper bearish pullback within this range, potentially to mitigate this 4-hour demand zone, grab some of this liquidity. And then if price action were to reach this area, this would be a very important zone, because essentially what would then be happening is price action would then be coming in very close to that 4-hour strong low. If this 4-hour strong low were to violate, then obviously we would see price action shift from a bullish market state to a bearish market state, and that would then translate to our higher time frames as well. All right, so very interesting price action that we're seeing here on EU. Across the board though, we are anticipating bearishness to step in. The extent of that bearishness is what remains to be seen, how long it's going to last, and at what point that bearishness could potentially switch back to bullishness to give us that deeper pullback overall on the weekly time frame. All right, as always, if you guys enjoyed this video, please make sure that you hit that like button, subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.